So we may begin. It seems as though we've got the majority of participants in. So I'd like to welcome you all and thank you for joining our webinar. And a big thanks to Angela for giving us the opportunity to present to you today. My name is Kim Callaway. I'm Head of Clients and Markets, and I will be your moderator for this session. Today, we are presenting a COVID-19 update exclusive for barristers clerks. The presenters from HLB Mann Judd will be Phil Nussbaum, Director Tax Consulting, Basilio, or Basil as we refer to him. He's a manager in our tax consulting and compliance, and Matt Hocking, who is a director in our restructuring and risk advisory. So without further ado, I would like to hand our presentation over to Basil. Thank you, Basil.
Great, thanks very much, Kim. Good morning, everyone. Hope everyone is keeping well. So I'll be discussing the employer cash boost as well as the other government stimulus measures, and then Bill will then discuss the JobKeeper payment. So just starting off with the employer cash boost. So this assistance was designed to support businesses to manage cash flow challenges and help businesses retain their employees. This measure is designed to support small and medium-sized businesses and to improve business confidence. So the government will provide tax-free cash flow boosts of between $20,000 and $100,000 to eligible businesses, and it's delivered through credits in the activity statement system when eligible businesses lodge their activity statements. So as far as eligibility is concerned, businesses will be eligible to receive the cash flow boost provided they are a small and medium business entity, and this includes obviously sole traders, partnerships, companies or trusts that had held an ABN on the 12th of March and continues to be active, has an aggregated annual turnover of under $50 million and has made eligible payments that the business is required to withhold from. Now, this even includes employees that you do not need to withhold anything. So even if your withholding is nil, you'll still be eligible to receive some cash flow, the minimum amount of cash flow boost. In terms of the timing of the initial cash flow boost, so the first tranche of cash flow boost. So the boost will be delivered, as mentioned, as credits in the activity statement system from the 28th of April. So even if you were to lodge early before that date, you won't receive the cash flow boost until the 28th of April ticks over. So if you are a quarterly lodger, you'll receive the cash flow boost for the March quarter as well as the June quarter. If you're a monthly lodger, then you'll receive credits for the months of March, April, May, and June. In terms of how the initial cash flow boost is calculated, it's based on the amount of a business's pay-as-you-go withholding liability. So eligible businesses that withhold tax on their employee salary and wages will receive a credit equal to 100% of the amount withheld, up to a maximum limit of $50,000. That's not per employee, that's just the maximum total amount that you can receive as a cash flow boost, $50,000. As mentioned, even if you have employees and you're not required to withhold or make any pay-as-you-go withholding payments, you still receive the minimum credit of $10,000. Monthly lodgers will receive a credit that's calculated at 3 times the rate, so 300% in the March activity statement, and this was designed to align with quarterly lodgers. As mentioned, the total of the initial cash flow boosts across all of the relevant periods can't exceed that maximum limit of $50,000. There is an additional cash flow boost, so the second tranche of this. So basically, in terms of the eligibility of that, if you did receive the first tranche of these initial cash flow boosts, then you'll automatically receive the second tranche of cash flow boost. As far as the timing is concerned, this second tranche of cash flow boosts, you'll basically start to receive these from when you lodge your June through to September activity statements. So again, if you're on a quarterly, if you're a quarterly lodgement cycle, you'll receive these in 2 installments. But if you're a monthly, you'll receive them in 4 installments. So June, July, August, September. As far as how that is calculated, basically whatever amount you receive as your total cash flow boost as part of the first tranche, you'll basically receive the exact same amount as part of the second tranche. So if you were, for example, if you were to receive $30,000 a cash flow boost in the first tranche, you automatically receive a second tranche of $30,000, so a total of $60,000 of cash flow boost. Just covering off on some of the tax consequences. So all the cash flow boosts are tax-free, and they are not required to be paid back when the business's cash flow improves. The boost amounts aren't subject to GST. The business will still be entitled to a deduction for the pay-as-you-go withholding that it's paid to its employees. And there's no effect on the tax paid by employees in respect of their salary and wages. Just finally on that slide, just touching on some schemes. There is some integrity measures put in place that business will not be eligible for cash flow boosts if it has entered into or carried out a scheme for the purpose of becoming entitled to the cash flow boost when it otherwise not be entitled, or where it seeks to increase the amount of the cash flow boost. So I just thought we would put some numbers around because it all sounds good, but in terms of the mechanics of it, I just thought it'd be better to show it in a table format. So if you look at that first line, the March 2020 activity statement. So if you were to have a GST amount there of $12,000 and you have this is obviously for a monthly lodger. If you were to have a pay-as-you-go withholding for that month of $5,000, so the stimulus amount received is 3 times the amount of the withholding. So basically $15,000, 3 times $5,000, $15,000. So it'll actually bring your BAS down to a $2,000 payable. April and May are identical in the sense that whatever your pay-as-you-go withholding liability is for that month, you basically then lodge that, and then automatically the ATO will apply the exact same amount as the withholding liability as a credit. So basically you won't have anything to pay for those 2 months, so the months of April and May. June is a tricky month. June, you'll have your quarterly GST liability there. So in this example, $6,500. You'll have your monthly pay-as-you-go withholding for that month of $5,000. Now, the stimulus measure for this particular month is a bit tricky. You'll see there, I've got a little note there at the bottom, that hashtag note. So basically, this $12,500 is calculated as the $5,000 being your June pay-as-you-go withholding liability that you'll receive as a credit. Plus, you'll then start to receive the second tranche of stimulus payment. So it'll be the first payment of the second tranche of stimulus payment. So, so basically, you'll receive $7,500 per month. And how that is calculated is you would have received a total of $30,000 of stimulus payments. So the $15,000 from March, the $5,000 from April, the $5,000 from May, and the $5,000 from June. So that's a total of $30,000. And then you're able to basically receive an additional stimulus payment as part of the second tranche. So you basically divide $30,000 divided by 4. So $7,500 as stimulus payment. So that in this example, it'll push you into a BAS refund. So that'll actually be refunded to the business. July and August will be identical. You basically continue to have your monthly pay-as-you-go withholding, whereas though you'll now start to receive a higher, in this example, a higher level of stimulus payment, bringing you into a net refund position. So again, that will actually physically be refunded by the tax office. September is identical, with the exception for obviously including the GST for the July to September quarter. So that's it's a little bit to take in there. So I guess the polling question that I have there is, does your chambers need any assistance with claiming the cash flow boost? So I'll just cover off on some of the other government stimulus measures that have been announced. So the first one there is on pay-as-you-go instalment variations. So there is the option to vary the March 2020 quarter pay-as-you-go instalment to nil, as well as an additional option of claiming back the pay-as-you-go instalments paid in the September 19 and December 19 BASs. Now, you've always been allowed to do that on the basis that your eventual tax liability at the end of the year was within a set parameter, but under these announced measures, they have now removed those parameters. There is no separate declaration or registration required. This can just be done on the March 2020 BAS form at label 5B. It's also important to note that there isn't any requirement to claim back all of the prior pay-as-you-go instalments paid. So theoretically you could only claim up to a certain amount, obviously limited to how much you have paid in the September and December quarter pay-as-you-go instalments. But obviously you don't have to claim back all of it if you don't wish to. In terms of ATO support, the ATO have announced a couple of measures, firstly with payment deferrals. So if you are having difficulty paying the tax, then the ATO should be contacted as early as possible to discuss your situation, as there are a range of options to support you through this period. And this could include deferring your income tax and BAS payment due dates currently up to the 12th of September. In terms of interest and penalty remissions, if the business is affected by COVID-19, then the tax office will consider remitting interest and penalties that have incurred after the 23rd of January this year. With the low interest payment plans, again, if the business has been affected by COVID-19 and you need help to pay your existing and ongoing tax liabilities, then the ATO should be contacted to discuss entering a low interest payment plan. I guess with all that, the underlying theme there with the tax office is that they still would like lodgements to be made on time. So they would much rather the lodgements being made on time, and then obviously using some of this support that they've announced to in order to deal with the debt. In terms of the instant asset write-off, so the government has expanded the instant asset write-off regime. So it's providing cash flow benefits for businesses that will be able to immediately deduct purchases of eligible assets, each costing less than $150,000. Now, this has increased from the current threshold of $30,000. So the threshold of $150,000 applies on a per asset basis. So eligible businesses can immediately write off multiple assets. It applies to new or second-hand assets first used or installed ready for use from the 12th of March this year until 30 June this year, at which point the threshold is due to revert back to $1,000 for small businesses from the 1st of July this year. Finally, then, I just wanted to touch on the early release of superannuation. So individuals can apply for access of up to $10,000 of their superannuation in this current 2020 financial year, and a further $10,000 in the 2021 financial year. Now, applications can be made from Monday, from this past Monday, the 20th of April, up until the 24th of September, when the measure is due to end. Now, to apply for this earlier release, you must meet any one of the following conditions. So you are unemployed, or you are eligible to receive job seeker payments, youth allowance, parenting payments, those type of benefits from Centrelink, or if after the 1st of January this year you were made redundant or your working hours were reduced by 20% or more, and as a sole trader your business was suspended or there was a reduction in turnover of 20% or more. So I guess for the individual barristers, there's that small sort of condition there, in that similar to the JobKeeper, which Bill will touch on, you do need to demonstrate that there is a reduction reduction in turnover of 20% or more. And it's also important to note that the payment, the early release of super payment, is a tax-free payment, so there's no tax consequences on accessing those funds. So I guess the next poll question that we had there was that, out of all the stimulus measures announced there, which one would be most relevant to your chambers and or your individual barristers?
So hi everyone. Firstly, hope you're all well, and pity we can't actually hold a normal seminar, but anyway, this will have to do. As many thanks to Angela for organising this teleconference webinar. So I'm really going to talk about today the JobKeeper and really look at an overview. These are areas I will discuss: the employer eligibility, the employee eligibility, timing and process, and the uncertainties and risks. And I'll also talk about how it applies to barristers as well. So what is it? What is the JobKeeper? I'm sure you all know a little bit about it, but essentially it's a wage subsidy to businesses which have been impacted by the coronavirus. So the government's going to provide eligible employers with $1,500 per fortnight to help them retain workers through this period. And these are rules, and these rules have been established by a Treasury rather than legislation. Poll question: does your chambers or your barristers need any assistance with determining eligibility and or applying for the JobKeeper payment? So next slide is I'll talk about employer eligibility. So, and this is probably the turnover test or turnover decline test is probably one of the most important aspects and most controversial aspects of this whole JobKeeper scheme. And so employers will basically be eligible if at the time of applying, they estimate their turnover has fallen by at least, or projected to fall by at least 30% due to the current, restrictions and the COVID-19 impact. Now, the period that you can select, and this is very important, is basically, it can be a month from March, any month from March 2020 to September 2020, compared to the same month in the previous year, in 19, or a quarterly period can also be chosen. Again, so you can compare the June 2020 quarter or the September 2020 quarter to the actual quarter for the same period last year. If the turnover, for example, hasn't declined in a particular month, but the businesses can start claiming from a future period. So, for example, if the business didn't meet the decline in turnover test, say for March or April, you can start claiming in May if you satisfy the test in May. And the good thing about it is if you satisfy the test, then there's no requirement for the business to retest the turnover test. So for example, if you incurred a decline in May 2020 and then registered, but then the next month you had a very good month, it doesn't matter. Once you're in, and you'll be entitled right up till the end of September 2020. So how do you measure? What's the definition of turnover? Well, basically it's defined to be GST turnover as reported on your BAS statements. And this includes all Australian taxable supplies and GST supplies, but not input tax supplies. I mean, essentially for chambers, that'll be the amount that you report at G1 in your BAS. Where a business sort of hasn't been in operation a year earlier, or the turnover, and that could be, for example, for a reader, or the turnover a year earlier is not representative of the usual turnover, The ATO does have a discretion to consider additional information to establish they've been adversely impacted by COVID-19, and they can apply alternate methodology. Now, probably one of the big questions, obviously, everyone has is, can chambers satisfy the decline in revenue test? It's a lot easier for a normal business, but obviously chambers are a little bit unique in what they do. And I suppose that when you look at it, what's your main source of revenue? The revenue would comprise of floor fees, rent in some cases, and also the recharging of certain expenses to the barristers. So I suppose for chambers where the individuals have it directly, or the barristers have a direct lease with the landlord themselves, I think it may be very difficult to satisfy the decline in revenue tests, because floor fees obviously will still need to be paid to cover things like, you know, cost of wages and running costs. So it's hard to see in those situations where revenues could decrease. One option could be maybe to reduce those floor fees, especially for the barristers who qualified for the JobKeeper program. However, you know, it may be difficult to get that, you know, 30% revenue reduction. For chambers though, where the head lease is in the name of the chambers, the chambers may be able to obtain a rent waiver or deferral from the landlord. So in that situation, it's possible that, you know, the barristers will not be charged rent by the chambers, and therefore the chambers' income, you know, may decrease, possibly satisfying the decline in revenue test. And just on this, the government has released a code of conduct principles relating to commercial leases and negotiating amendments in good faith between landlords and tenants. So this may assist chambers in obtaining a rental waiver or deferral. But Matt Hocking will discuss this in more detail during his presentation. So now we talk about employees' eligibility. So these are some of the requirements. Employees need to be on the employees' books as of 1st of March 2020. Then they can be full-time, part-time, long-term casuals, and also stood-down employees. Casual employees who are eligible, to be eligible, they must be with the employer, must have been with the employer on a regular and systematic basis for at least the past 12 months. The employee must be an Australian citizen, the holder of a permanent visa, or a special category visa holder at 1st of March. The employee must be a resident of Australia for tax purposes. Eligible employers who have stood down employees before the scheme will be able to participate. Also, employees that are re-engaged by the business that was their employer on 1st of March also will be eligible. Unfortunately, employees hired after 1st of March won't be eligible. So just with barristers, so there are some basic, they can also register for JobKeeper payments from the 30th of March. Their criteria is fairly straightforward. They just have to have an ABN number on or before 12th of March, and either have lodged their tax returns for 19, or in effect made a taxable supply between 1st of July and 12th of March. So in other words, as long as they've lodged a BAS return from 1st of July, which most of them would have last year, that they will be eligible to participate. Again, the barrister must qualify satisfied for the decline in turnover test, as mentioned previously. And this is an interesting one. Most barristers, of course, for barristers that account for GST on a cash basis, so that means they can, under these rules, they can determine whether they satisfy the decline in turnover test on either a cash basis or an accruals basis, depending on which one gives them the most favourable result. So generally what happens is most barristers are on a cash basis. The whole turnover test is really based on an accruals basis, on an assumption of an accruals basis. However, if you are using a cash basis, you can use either method, whichever one gives you the more favourable result. So for example, a barrister may have had a very good month, say for March, with a lot of cash coming in from previous periods. However, he hasn't billed out as much for March on an accruals basis. He could use an accruals basis for determining the revenue test. So that's quite a good concession for the barristers, and the same principle would apply for the chambers. So the timing and process, probably the essential thing about a JobKeeper is that businesses must have paid their employees first before they're entitled to receive the JobKeeper payment. And the employers are going to be reimbursed by the ATO monthly in arrears, starting from, we believe, on the 4th of May. So the checks should be coming in on around the 4th of May, backdated obviously to the 30th of March. The payments to employees should be made through an employee's payroll system and reported to the ATO via single touch payroll. So eligible employers must pay employees a minimum of $1,500 per fortnight from the 30th of March in order to be eligible. So if the employee has been paid less than $1,500 per fortnight, for example, a top-up payment will be required. So if the employee is paid $1,000 per fortnight, a top-up payment of $500 is required to be paid by the chambers. If the employee is paid more than $1,500 a fortnight, well, then the employee then will just be reimbursed by the JobKeeper. And the other good news is the JobKeeper will be made by the ATO directly to the employer's bank account and won't be used to offset any other tax liabilities. In terms of PAYG withholding and superannuation, so you must pay, as I mentioned, you must pay a minimum of $1,500 per fortnight, and you must withhold tax on that. Okay, and where an employee is paid more than $1,500 per fortnight, then the normal employer superannuation guarantee obligations won't change. However, where an employee wages are actually topped up to meet the minimum requirements, there's no superannuation obligation in relation to the top up. So in other words, if you pay somebody $1,000, but you have to top them up for an additional $500 to bring them up to $1,500, you only have to pay superannuation guarantee on the $1,000. The additional $500 you don't need to pay, it's optional in terms of superannuation. So there are a lot of uncertainties and risks here. As the JobKeeper is administered by the ATO, of course, there are integrity measures available to the Commissioner. And this is important to know that, companies which deliberately enter into sort of contrived arrangements, with the purpose of reducing their revenue in order to gain the JobKeeper payments, could leave the business, open for repayment of the JobKeeper benefit. And especially if it's been paid, even though if it's been paid to the employee. So I think we just need to be careful. There's also admin and criminal penalties for, improperly obtaining JobKeeper benefits. So I think you just need to be very careful, you know, when you're looking, especially at the turnover test and determining eligibility. So look, this is a very high-level summary of the JobKeeper payment system. The devil really, of course, is in the detail. And now I'll turn over now to Matt Hocking from our Risk and Advisory Division, and which he'll talk about, discuss some of the various other relief packages released by the government, which I think may assist both chambers and barristers.
Good morning, everyone, and I hope everyone is well. I'm just going to touch on a couple of code of conducts that's been developed by government arising out of the COVID-19 crisis. One relates to the SME commercial lending principles, and the other one is the SME banking lending principles. So just onto the leasing principles. As Bill touched on, this code of conduct does tie in closely with the JobKeeper program. Effectively, it's to provide tenants who have been affected by COVID-19 with a form of relief from paying rent because there's been a reduction in their turnover, which has obviously occurred very, very quickly in the last month or so. So, you know, for the code to be accessible for tenants, one, they have to be a commercial tenant. That's relating to retail, office or industrial premises. It doesn't relate to residential tenancies. And two, they have to be an SME tenant. So they have to be eligible for the JobKeeper program, and they have to have a turnover of up to 50 million. So the general principles for relief for tenants is that the amount of the rent reduction is based on the reduction of the tenant's turnover. And it's generally for the JobKeeper time period. So what does that mean? Well, effectively, if you have a reduction in turnover of 30%, then you can go negotiate with your landlord for your rent to be reduced by the same proportion. As part of the code, when there is that reduction, let's say it's 30%, then 50% of that 30%, the rent is completely waived. It does not need to be paid back in the future. And the other part of that, the rent is deferred. The deferral period under the code is that it needs to be amortised for the greater period of the remaining lease term, or 2 years. So just some of the other points relating to the code is that the landlords are unable to terminate the lease for non-payment of rent during the period. The tenants must comply with the terms of the negotiated changes that they enter into with their landlords. And if they materially fail to do so, then they can't rely on the provisions of the code. Landlords are not able to draw on their security, so if they hold any bank guarantees, cash bonds for the non-payment of rent. The tenants, need to be given the opportunity to extend their leases for the equivalent period of that rent waiver deferral period. And there's a whole bunch of other things around, you know, your outgoings, etc., and how that actually works. Which, if you have any questions about that, if it comes to them, we're more than happy to assist you. So as I mentioned, there's a whole bunch of provisions around the SME commercial leasing principles as well. And effectively, the government is guaranteeing loans to SME entities. Generally, for new and existing customers, they can go to their existing banks or new banks, and they can apply for these loans, and they relate to business loans or equipment finance loans up to 250,000 with an interest rate of around 4%. Generally, it's structured so that there's no repayments within the 6 months. Principal and interest repayments won't apply for the first 6 months. The loan period will be up to 3 years, and there's no loan or services fees on application. There's also some concessions the banks are making around reducing their interest rates for SME overdrafts and other cash-based loans. And they've also extended loan maturities to up to 6 months so that businesses have a bit of wiggle room during this time period to be able to stabilise their businesses. Generally, what we've found, just with initial discussions with banks and talking to some customers who are starting to apply, for these loans, that it's not a fait accompli, and it's not necessarily that you can just go to your bank and be very easy for you to access and get a successful approval for these loans. You do need to still provide all the normal information that you would to the bank when applying for any loan, and they will stringently test to see whether or not you're able to service that loan, and they will apply the banking principles that have come out of the Royal Commission. So there are certain banks that are probably taking a more stricter approach than others. But our message to clients is that it's not, it's not a lay down that the bank will lend you that money. So you need to come prepared and have your documents in order if you do want to apply for a loan. Just lastly, I just wanted to touch on the residential customer relief packages that all personal customers for their banks can ask for a 3-month deferral on their home or investment loan repayments. And that can also be extended by another 3 months, so up to six months. So that basically means for a customer with a typical home loan of $400,000, they can defer the interest payments on that loan, or interest and principal payments on that loan, for up to over $10,000 for 6 months, which would equate to about $1,800 a month. Also have access to term deposits at 1.75% for 10 months. And they're able to reduce their existing home loan rates by accessing the bank's discounted pricing on fixed rates into the low 2s, which for most people on variable rates is lower than they would be on now. Polling question, just to see if anyone would like HB Debt Advisory to contact them directly about their loans or funding.
All right. So we'll now open the session for the first question to our panelist. GST turnover is derived from our monthly floor fees charged out to barristers. What part of our floor fees constitutes GST turnover? Is it only the rent, wages, or are monthly consumables billed out per barrister like photocopying and stationery included?
Yeah, I think all of that would, all of those recharges and that income would go into G1. So, because they're all charged to the barrister on their invoices, so that would form part of your income for G1. So I think that would be all included as part of GST turnover definition.
Do you have any practical tips on calculating projected GST turnover? What factors need to be taken into account to make a fair and reasonable projection?
Yeah, that's probably the most difficult aspect of this whole JobKeeper payment, is where you're going to project. I think firstly, you can project for 1 month, if that makes it easier. So we're in the, and especially now if we're in the month of April, you can use the month of April, for example, and compare that to April last year. And that would be a good starting point in terms of working out whether your income has gone down. If that doesn't give you the right answer, then obviously you maybe look at a quarter, up to June quarter, and really you have to try and project as best you can, what the income will be. It's I think most companies are in the same boat. It's not an easy thing to do. Matt, have you got any opinion on of working out projections in general for a company? Projected income.
Look, there's a number of factors. We're advising our clients to understand their current position. It's very hard when you're looking at business forecasting in this environment, considering there's so many unknowns, to I guess adequately plan for the future. But we are suggesting, and part of the framework that we work with our clients is doing a lot of sensitivity analysis so that they can, I guess, plan for different variables that will arise, because it's very hard to understand what's going to happen in the next 6 months, let alone the next 2 years. And plan for the worst, hope for the best and I guess hope that you don't have to implement or use that forecasting.
Thank you. Chambers has reduced all non-essential spending so that the monthly cost to barristers who are experiencing a reduction in work is reduced. Is there any difficulty with this course when assessing Chambers' eligibility for the JobKeeper payment? Basil, did you want to answer that one?
Yeah, look, I don't. I don't believe there is. I mean, it's a little bit difficult. I mean, you firstly do need to establish that decline in turnover, I mean, as I said, you know, apart from having some of those options up your sleeve in terms of comparing, you know, using either the cash or accruals method, as Bill pointed out, and you know, picking the one that's basically that works better in their favour. Yeah, otherwise it's a little bit difficult. Bill, I don't know if you had anything else to add to that.
No, I agree. I agree with you. Yes, but that will reduce that will produce a decline in revenue for the chambers. So it'd be worthwhile sort of trying to project that for a few months. You know, so I think you'd need to do some numbers on that, more detailed numbers.
If chambers qualify, and if so, what financial assistance through the government stimulus package is available to the administration side of chambers?
Well, if it's obviously chambers are the employer, so I mean they certainly would be eligible for the cash flow boost. I mean, unlike JobKeeper, there is no requirement to demonstrate a fall in turnover for the cash flow boost. Basically, any as an employer, you automatically be. I mean, apart from those some sort of entry level criteria, eligibility criteria, it will be able to receive the cash flow boost. So, as I said, that's quite a good stimulus measure. Anything else, Bill, to that?
Yeah, I think they're really the two main ones. I think that you've covered.
Okay. If a junior's pay is $630 gross per week and clears $565, he is registered for the JobKeeper payment. Do we pay him $630 or $750 less tax?
Yes, in that case, and I discussed that in our presentation. Yeah, you'd have to pay the higher amount. You have to pay him $750, so you would have to top up his salary less the appropriate tax.
So the second part of that question, which I think you've answered, but I'm going to ask it anyway. In relation to the JobKeeper payment, do the employers pay the employees their normal net pay or the total amount received? Do the employers have to pay the superannuation? If a junior's pay is $650 gross per week, what happens to the balance of $100?
Well, he has to be paid that extra. In terms of he'll need to be paid that extra amount to bring him up to the $750.
Does the requirement for a reduction in turnover test of 20%, in brackets access to super, close brackets, or 30%, open brackets JobKeeper payment, only apply on a quarter by quarter comparison, such that the businesses that have less than 12 months, that is 4 quarters, of comparable data are unable to use this test?
Yeah, so what's happened and this really probably applies to someone like to readers who have only really maybe established over the last 6 months, so they haven't got a prior period, a prior year to compare to in terms of the turnover test. And I mentioned this in my presentation, the ATO has a discretion to consider additional information and apply for alternate methodologies. I mean, they haven't come out and told us yet what it is, what these alternate methodologies are, but we would assume that, for example, if the month of March, if you'd be able to compare, say, the month of March to an earlier period, or April to an earlier period like February, and if there's been a 30% reduction, you know, I think that would be sufficient. But they definitely can apply for the JobKeeper, and but we're just waiting on alternative to have more information from the ATO on that. But I would recommend they still apply.
So if
In
a
terms-
business is,
Sorry, Kim.
Go.
Just I guess in terms of the in answering that question for the early access to super, for whatever reason they decided to use a different percentage to the JobKeeper, and you know, just to make all our lives more difficult. I'm unsure whether there is that element of discretion available. At the moment, it looks like it's quite hard and fast that you do need to have that 20%. I'm not sure if there is such a discretion mechanism in place for that early access to super. I guess, you know, hopefully that will sort of still come out in due course. But yeah. So.
Okay, thank you. If a business is using cash rather than accruals accounting, but demonstrates the accruals method would show a reduction in turnover more readily than cash, where there may be some months of receivables trickling in, but already the work being written insignificantly lower, can that be used in the alternative?
Yes, so okay, I touched on this during my presentation. So yes, you can, most barristers and most chambers would be using the cash basis for GST. So therefore, just for this turnover test purposes, you can look at either the cash basis or you can look at the accruals basis. So if the accruals basis gave you a better result, then you could use that, or whichever one gives you the best result, really. So that's quite a good concession.
Okay, I think you may have touched this one, but look, we'll read again. If you are required to have the Commissioner of Taxation exercise a discretion for either early access to super or JobKeeper, what are the most persuasive arguments to make re superannuation? If paying via JobKeeper, do we pay super on the JobKeeper wage or on the employee's normal wage?
Yeah, Basil, we were talking about that before. Do you want to answer that one?
Yeah. So I guess the second part of that question, you would still pay the superannuation on the normal wage, and as I said, if the lower wage is lower than the JobKeeper amount, then you have the option to pay super on the top up amount. In terms of the early access to superannuation, sorry, Kim, what was the question again? Sorry, about.
So if you're required to have the Commissioner of Taxation exercise a discretion for either early access to super, JobKeeper, what are the most persuasive arguments to make re superannuation if paying via? Oh no, sorry, that's another question. I'm so sorry.
No, that's okay. Yeah,
Yeah.
just that first part. Yeah, so I guess in terms of the discretion that's allowable, how I just sort of mentioned, whether there is that discretion available to the Commissioner in relation to the early access to super is still unknown. As I said, it certainly is available as far as the JobKeeper is concerned. But if you were to, assuming that there is that element of discretion for the early access to super, then I guess some of the factors, I mean, you still need to ensure that you have some sort of basis for what your, what your reduction in turnover is and how you've actually calculated it. Obviously, also there'll need to be, need to ensure that you do pass some of that entry level eligibility criteria as well. So. Yeah.
Thank you. We've just got a few more questions now, and I'm going now to the live Q&A. Re the employer cash boost. When paying our BAS, do we deduct the PAYG amount ourselves, or do we pay it first and receive it back as a credit later?
Yeah, no. So you would prepare the BAS as you normally do. So you basically include, if it's a GST quarterly amount, then you'd include your GST, you'd include your pay-as-you-go withholding. So exactly the same as you normally do. However, when you go to pay your BAS, then you basically pay the lower amount. So you still report it as you normally do, and you lodge it as you normally do. It's just that the credit will then be applied automatically by the ATO. So you can just go ahead and pay the lower amount.
Many floors looked at job seeker, but staff have to be over 22. Are there any benefits for staff between the ages of 17 to 22?
Yeah, no, the minimum age is 16 years of age. So I'm not sure where's the 22 come from. I'm not aware of 22.
So is 16 Bill JobKeeper?
JobKeeper.
No, this question is
job seeker. Oh, job
this
seeker.
is
Sorry.
job seeker.
Oh, sorry. Okay.
That's right.
Job seeker.
And why would they be using job seeker? I suppose if that person wanted to.
Well, if they're not entitled, if the floor can't get JobKeeper, then the person who's been made, unemployed or redundant, whatever, may be going to job seeker as an alternate.
So do we need to come back to that person in terms of the age for a job seeker?
Yes, we might have to come back. We might have to come back.
We'll do that.
Yep.
Barristers that just suffer a short-term loss, that is 5 to 10%, don't appear to qualify for any stimulus apart from their floor being able to get PAYG relief to keep on staff. Shouldn't they just suck it up?
Is that from you, Angela? Is that from you? Well, 5 to 10%. Well, the good news is that, you can maybe wait for a later period. Yeah, at the moment, 5 to 10, that's not enough, but maybe you're looking in May and June down the track, maybe their income will go down by the 30%. So you can wait. So if you might not meet it now in April, but you may meet it in May, June, July, August. So you can wait till you go down the track. So apart from that, the other benefits are what Basil mentioned, and there's some good benefits there about they can do a PAYG variation. So for example, their March BAS, they can in effect vary their PAYG income tax to nil in that installment. And also get a deferment on anything else that's owing. So there are other benefits to help them with cash flow.
I guess the other aspect of that is looking into why it's only a 5 to 10% drop. Like, is there any sort of extenuating circumstances? As I said, if for example the period you're comparing to last year, if they got paid for a case they had done maybe 2 or 3 years ago that they were chasing that debt, if they had got paid that last year, maybe again some discrete, on the face of it, it looks like it's only a drop of 5 to 10%. But if you possibly some a discretion can be can be implemented that to say that to put that particular income aside because it was a one-off payment. But that's it could work.
Okay, it's 12 o'clock, but we've got one more question. So I hope everyone's happy for me just to ask this question. If your assessment taking into account a further reduction in floor fees, but is proven to be wrong, and there was not a 30% decline for the 2020 quarter compared to 19, would there be a penalty?
Well, yeah, that's the problem with this whole JobKeeper thing. I mean, there are quite strict integrity measures, as I mentioned before, and I suppose it comes down to how far away you were from the 30%. Whether you were 1% off, or I think there are some provisions for discretion there for the commissioner. But obviously, if it's a contrived arrangement, that's to fall into the JobKeeper, regime, or that then you could be up for penalties. But I think if it was a small percentage, if you missed, again, we haven't got all the details for all the forms yet, exactly what they want in terms of the enrolment. All we have at the moment is the enrolment form, which tells us which month you're applying for. But so we haven't got all the details yet. But I would have thought if you're slightly under, I think you may be okay if you've got a good reason. Basil, what do you think?
Yeah, I think as said that there is a, I mean, as part of the integrity measures, there is, provided that you in good faith, estimated that there was going to be a 30% or more decline, and you just come up short, they're not going to throw the book at you. I mean, I think, if you in good faith, estimated, obviously it's very hard to project how Matt was saying. I mean, I think there's going to be some common sense. They're not going to necessarily throw the book at you. I mean, it's being mindful of the rules, I guess, and what the ATO could do. But I mean, if you're estimating it and you're going to come up a little bit short, then I think it's not going to be too bad.
Okay, so I think that we should end our question and answer panel there. I'd like to thank all of our panellists today and Angela. If you would like a call back or any further details on our presentation today, please don't hesitate to contact either one of our panellists or myself. And I would encourage you to share these slides and circulate them with your barristers. We're very happy for you to do that. And again, I would like to thank you for joining us today.